Shares of Meta, one of the most famous companies in the world, have been in a death spiral this week. The company issued a weak forecast for the fourth quarter and came up well short of Wall Street's expectations when it came to earnings. Stocks are down now as much as 70% this year. The company is contending with a broad slowdown in online ad spending, increased competition from platforms such as TikTok, and a stronger dollar is also hurting businesses' forward earnings. We've seen the impact of all this across the board. Alphabet, Amazon, Microsoft, even Pinterest shares plunged this week. The Nasdaq, the tech index as a whole, is down around 30% this year only, and it's on course for its worst annual performance since 2008.
The potential recession, the fear of the potential recession are very much hampering the sentiment. And traders are looking, they have been focusing on earnings for the past week, and especially now the mega tech earnings are here. So their concerns are very much actually validated by companies that you mentioned, Microsoft and Alphabet, that yes, budget cuts are in place. Yes, headcounts are in focus. And all of that for me spells only one thing, and that is imminent recession.
But for Meta, there are also other factors at play. Take a look at these tweets, for instance. Maybe Meta investing $10 billion in a fake reality was a bad idea. And again, Zuck spending money like a drunken sailor on virtual reality is the highest respect I've ever seen for a tech company. This is all obviously hinting at the Metaverse, a virtual reality in Mark Zuckerberg's experimental bet that for now has only seemed to have driven up the company's overall costs. Analysts seem to still struggle to understand what the Metaverse means, let alone whether it will be profitable or not.
Okay, Ludovico, thank you so much for that. Well, let's go back to Daniel Ives now, Managing Director of Wedbush Securities in New York. Hi again, Daniel. As we heard there, the tech sector has plunged some 30% since January. Meta is down a whopping 60%, while Amazon and Alphabet has shed around 30%. Why are we seeing investors flee this once high-flying sector?
I mean, Teflon-like, and ultimately now you're starting to see the economic slowdown hit big tech, and that's the first time really in the last decade. And I think it's just the reality of a new environment, but it's really going to be a bifurcation of tech. Apple was a standout, Microsoft a relative standout. But you look at Meta, there's going to be some really difficult days ahead in terms of trying to transform the business. And digital ad dollars are really starting to slow down.
Yes, and do you believe the losses we're seeing in tech right now are simply a blip? When can we expect them to turn a corner?
I think we've started to get to some sort of bombing process in terms of where numbers go. Now, investors, it's going to be guilty until proven innocent on tech. But I think what you're starting to see, names like Amazon, Microsoft, Apple rationalizing, cutting costs, you're starting to get to a new normal. Valuations will continue to be a debate, but we're still bullish on tech and view this as just an intermediate, painful digestion rather than the end of big tech's dominance.
Okay, let's see if that does in fact come to bear. Daniel Ives from Wedbush Securities.
Thank you.
A pleasure as always. Thank you.